Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you're new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating. This content is brought to you by Uphold, which is a great platform that makes it easy to buy, sell, trade, and earn cryptocurrencies. I've been using Uphold since 2017. They're one of my go-to exchanges for liquidity. They have 10 plus million users, 200 plus cryptocurrencies, and they're available in 150 countries. You can also trade precious metals and equities on Uphold. If you'd like to learn more, please visit the link in the description. Well, my friends, boy, oh boy, was it a rough day for the crypto market. And maybe not just a day, but rough 48 to 72 hours. Obviously, we've been covering the news about Binance and FTX. And look, the market is taking a beating as a result of the drama there, potential insolvency of FTX. And we all, of course, broke the news earlier today that Binance is looking to buy FTX. But that is not a finished deal. That is not a completed deal. They have to do their due diligence. And let's hope FTX does not go into some insolvency and, it gets worse, because that would be really bad for the market. However, it does play into the narratives we have been talking about, and that is black swan events that could further drive the price of crypto down. And that's what's happening. So Bitcoin today dropped below 18,000, hit 17,266. So we have our black swan event. It's a big one. And here, Matthew Hyland highlighted the bearish Bitcoin descending triangle I have been discussing for months is close to breaking bearish. The breakdown target is approximately $10,500. So I have been talking about 10K, tweeting about it. Some people were hating on me and so forth. But look, we're in that max pain zone. And I tweeted about it today. You can't fight the Fed. That is the major macro trigger, here that is hurting all markets right now. They're raising rates. They're trying to fight inflation. So you cannot fight the Fed. However, the good thing is that it plays out into the bear market, which is a great accumulation opportunity. And if Bitcoin goes to 10 to 11 or 12K, I'm going to be backing the truck up and loading up like I did in December 2018, as well as March 2020. And of course, we've seen how the market has played out after those lows, right? Crypto is not dead. I know that narrative is going to start being pushed by the mainstream media, especially when you have a black swan event like the FTX situation. But FTX is just one exchange. You have other exchanges that are solid. Their books are in order. There are a lot of legacy companies. And look, what we've seen is despite all this, big institutions are setting up shop. BlackRock, Fidelity, BNY Mellon, NASDAQ, you name it, right? And they know that now's the time to enter in, scoop up as much as you can, the tokens, as well as go after those crypto companies which are not doing well, and position yourself for growth, with the upcoming bull markets. And I said that, bull markets, not market, because after 2024 and 2025, there's going to be another bear market and then a bull market 4 years from there, right? It's all market cycles playing out. So we're in that max pain zone. Don't be surprised if Bitcoin goes down to 10K. I'm not saying it's guaranteed, but we have our black swan event, and we could continue to see further pressure on the price, and that could, keep going down. Now, there are some updates here that I want to share with you guys, and that is related to the Binance FTX situation. And here it's reported that the US CFTC is monitoring Binance's acquisition of FTX, a spokesperson told Reuters. So let's see if the US regulators even allow this to happen, right? But the good thing is that what we know is that this is just between Binance.com and FTX.com, not FTX US, not Binance US. So those U.S. arms, which are doing business as or under different companies, I think they're going to be okay. So it's just the .coms that are trying to do the sorting out of the business here. Now, I tweeted out about this. It's really crazy, what happened to FTX. I said, it's crazy how FTX has fallen to this point, from Super Bowl ads, naming rights of sports arenas, Tom Brady sponsorship and Sam Bankman-Fried's personal branding to now Binance bailout and the FTX brand tarnish. So this is a big blow, man. Huge, huge here. If you just think about all the big things FTX was doing and all the marketing and all the big investors and the sponsors, they were doing some heavy marketing and had some, obviously very big names promoting them. And then now to almost insolvency and being bailed out by Binance. Now, don't get me wrong, CZ, I think he saw the holes in in some of the armor here of FTX, and he went and poked them, right? Getting ready to dump that FTT token. So he certainly pushed them over the edge, but it seems their books were not that great, and they had a lot of leverage off their token, which is not ideal. And CZ, to his credit, shared some really great things today, which I think this is the silver lining that it helps the industry to move to the next level. So CZ tweeted out 2 big lessons. 1, never use a token you created as collateral. 2, don't borrow if you run a crypto business. Don't use capital efficiently. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt. And then he also said, all crypto exchanges should do Merkle tree proof of reserves. Bank runs on fractal reserves. Crypto exchanges should not. Binance will start to do proof of reserves soon. Full transparency. I love this. Every exchange needs to do this. And if you are a crypto holder and you use exchanges to trade, to buy, obviously, this is what we want, guys. There needs to be this level of transparency and accountability, because look at what happened with Celsius and now FTX, right? And we can't have these things happening. The market has to mature, the industry has to mature, and a lot of the safeguards that exist in a traditional financial world have to be there. And if these exchanges, if they're not careful, they don't raise their standards, BlackRock, Fidelity, and these big traditional financial names, which have resources, which have history, which have political influence and power, will come take their lunch. They will put these exchanges out of business. And that's my worry for some of these exchanges. I'm not talking about Binance specifically, but some of these others that if they don't get their act together, they're going to be in trouble, because once again, these big well-known brands are going to come in and say, hey, don't trust these exchanges which are startups. Trust us. We have the branding. We've been here 70 years. We have insurance, and here's our books, and we're regulated, right? So I know CZ, for the most part, Binance is the world's largest crypto exchange. He seems to be doing things right, but I worry about others. Even Coinbase, I worry a bit. Even though Brian Armstrong from Coinbase CEO tweeted out a long thread today. I'll give you the first few items of this tweet, but he said, first off, I have a lot of sympathy for everyone involved in the current situation with FTX. It's stressful anytime there is a potential for customer loss. Second, Coinbase doesn't have any material exposure to FTX or FTT and no exposure to Alameda. He said, I think it's important to reinforce that what differentiates Coinbase in a moment like this event appears to be the result of risky business practices, including conflicts of interest between deeply intertwined entities and misuse of customer funds, lending user assets. Coinbase has always strived to be the most trusted player in the space, and we don't engage in this type of risk activity. Now he goes on and on. It's a very long thread, but good to hear that he's coming out and clarifying a few things, but there have been times I have worries about Coinbase. This is why I self-custody a majority of my crypto. It's on a hardware wallet. I have some crypto on exchanges, which I swing trade and do different things with, but the majority of my holdings are on a ledger. I have multiple ledger devices, but they're on the ledger hardware devices. And if you want to get one of those, there's links in the description to that. You can check it out. But this is the issue with, some of these exchanges. They're just not up to the standards of a Fidelity and some of these larger custodians. So, it is what it is. And here, Hunter Horsley of Bitwise, and I've interviewed Matt Hogan of Bitwise a few times. He tweeted out, "I'm so tired of these ridiculous crypto journeys, meteoric rise from obscurity only to burn to ash. Crypto companies don't have to be recklessly run. Coinbase, Circle, Anchorage, Bitwise, and many others have been bringing professionalism for years. Let's do better." Absolutely. We got to raise the standard. And I'm actually very disappointed, with FTX because of who they had there. They got Kevin O'Leary as a spokesperson, and they've done so much marketing, but yet on the back end, their books were not in order, and they were doing some things which were not great. The other thing here too, guys, which is not so much a black swan event, but it's negative news, and it's contributing to all altcoins, not doing well right now. And that is LBRY has lost their case against the SEC. And attorney John Deaton weighed in. He said the LBRY decision is a very bad decision. It's why I've been talking about this case for the last year. And it is true that if the reasoning utilized by the judge was the law in the US, it would serve a death blow, but it is not law. So he's absolutely right. This is not law, and this is one judge, but the SEC is going to pull this and say, see, this judge agreed with us. See, this is why Ripple shouldn't win. And we're going to go after other altcoins and why the other altcoins shouldn't win. This is why we need Ripple to win, my friends. John continues. He said, it is one district judge's interpretation of the law as applied to one specific case. LBRY's lawyers did not contest Howie's second prong requiring a common enterprise. They did not ask the judge to distinguish between the secondary market sales and the direct sales by LBRY. It seems like that was a big oversight by the lawyers in the LBRY case, but who knows? John says, in the Ripple XRP case, common enterprise is challenged. In fact, the SEC argued incoherently regarding the common enterprise. At first, the SEC argued Ripple was the common enterprise, but when the SEC was forced to concede that XRP holders do not obtain a legal or financial interest in Ripple, the SEC shifted and through a so-called expert witness argued next that the common enterprise was the entire XRP ecosystem, including exchanges, vendors, merchants, and retail holders. But because in part the XRP holders fought back and supplied 3,000 affidavits, refuting this alleged expert, the expert backed down and testified that he might have come to an entirely different conclusion if he had known what we were declaring in those affidavits at the time he wrote his report. So once again, this does not mean, the LBRY's loss does not mean Ripple's going to lose, but boy, it does hurt, the industry overall, because we need victories. Gensler is going to try to go after everything. So this is another item here that is not good for the market right now. So we're taking some blows, my friends, but macro level, right? I want to make sure this is not some depressing podcast here, but macro level, I'm still bullish. The short term, as I've been saying, max pain. So expect more pain. Now, speaking of the SEC, apparently they've now green-lighted BlockFi that their crypto yield accounts can be used by U.S. accredited investors. So see what just happened here, guys? The SEC is saying hardworking Americans cannot use BlockFi to, use their crypto to earn yield. Nope, can't do it. Only accredited investors. And they shook down BlockFi for $100 million, for those of you who remember. And that's sad, man. That's just sad. Anyway, moving ahead to some good news. HBAR, which I hold in my portfolio, I'm bullish on. They tweeted out today, we're excited to announce that the Realm, which is a pro league automated matchmaking, the EA licensed esports platform leveraging Hedera consensus service for data integrity, has launched in Apex Legends. So network adoption happening, the native token will benefit, right? The value of that network increases as it gets more adoption and utility, and the native token will benefit, once again, the trickle down of that value to the native token. Some big VeChain news. So I hold VeChain in my portfolio. VeChain Proof of Authority 2.0 is set to go live on November 17th at block height. Let's see, what is this? 13,815,000 with no user impact. However, devs and projects running Thor nodes should upgrade to version 2.01 to avoid issues with decentralized apps. So VeChain, they continue to build, they continue to get adoption. One of my favorite projects, and definitely bullish on it. Some other big news, it's kind of along the lines of what I was talking about. Despite all this black swan event drama and craziness that's happening in this bear market, the traditional financial players are coming in and building. Japanese investment banking giant Nomura is growing its crypto team amid the bear market. So they keep moving, they keep coming in, guys. They keep coming in. Here's a quote from the CEO. It's taken a while, a lot of work, and we've got to a point now where the firm is a strong believer. CEO Jez Mohadeen told Blockworks. And some other news out of Japan. Japan's largest mobile operator, NTT Docomo, to invest up to $4 billion into Web3 development. See, guys, these big players know it's boom and bust cycles. It's, bull and bear. We're in a bear market. There's blood on the streets. Now's the time to come in, steal the talent, grab up the companies that are going bankrupt and not doing well, take their technology, build out your technology and fortify your service and solutions, and get ready for the next bull market to make money. That is what's happening here. And once you understand, you can ride that wave. And it's not just for crypto. It's also for stocks, right? I'm buying the stock dips as well. I'm not doing anything with real estate right now. I have one investment property, and I think that's it, for now. I might do more, as I make more money in the next bull market. But right now, it's just buying up the dips and, buying the fear, buying the blood on the streets, guys. That's my approach. This is not financial or investment advice. Do your own research. But this is how people have made money in these downtimes, in these recessions, bear markets, whatever you want to call it. But once again, boom and bust, bull and bear. Look at it throughout history, right? All in the bear markets, always the end of the world. This time is different, and yes, there are sometimes different factors, but the psychology and the story, the cycle is still the same. Bottoming out, right? Shakes out the weak hands. The smart money scoop up, and then they hold and they're patient, wait for the markets to go back up. They sell and make a profit, while the dumb money retail start buying the top. But if you understand that is not what you should be doing, and you're on the side of smart money, tap yourself on the back, because there's a lot of people who don't understand that, guys. They don't, and they fall into the trap and they lose their money. But be thankful that you recognize that. And I hope, those of you who are new to investing, at least, listening to a podcast or watching this podcast, I'm hoping it opens your eyes to market cycles and being patient when it comes to investing. All right, my friends, leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.